What is up? Welcome to the January 2025 market update. Welcome to the first market update of the year. Hope you guys had an amazing holiday and happy new year. So excited to be with you again this year and get you rolling on everything that's going on with real estate here in the Valley. So first of all, if you were around for last year, you know we did our first annual Kicking It for Kids. We raised $10,000 for Phoenix Children's. It was amazing. We had food trucks and a DJ and lots of fun. And we're doing it again this year, March 30th, Chaparral Park, 10 a.m. Hopefully you guys can make it out. We've already got a bunch of great sponsors. In fact, we've already reached the $10,000 we raised last year, this year, and we just started telling people about it last week. So we are so excited. We're shooting for $25,000 for the families at Phoenix Children's this year. So hopefully you guys can come out, support, and help us do that. So the real estate market, what's going on? I know a lot of people and lots of our conversations have been around change in administration and what that's going to mean for the market. So I wanted to touch on that because we're starting to get calls from a lot of clients that are feeling excited about it. They feel like this new change in administration is going to bring with it lower interest rates and some different policies that are going to make the real estate market go up. So I wanted to give you my perspective on it, which is we don't actually know. I think there is a chance that lots of things that will happen will be very business friendly and they could cause the real estate market to spike up. We're still seeing lots of demand on our side, lots of clients that are still wanting to buy houses that are trying to figure this whole thing out, if rates are going to come down, if inventory is going to come up, and all of those kind of things. That being said, it really does depend a lot on what happens with interest rates. And the administration really isn't in charge of that as much as they would like to be in charge of that. That's really going to come from a couple of things. One, the Fed, and we've talked about this in previous updates. Right now, the Fed is looking at the economy and they're looking at the risk of reinflation. And they're kind of talking about maybe lowering slower or not feeling the need to rush to lower. Because the economy is in good shape, the consumer feels strong, the employment numbers are coming in good, and inflation is still above that 2% target that they have. And so the worry on the Fed side is they lower rates, it causes a bunch of people to invest in the market, and then that causes inflation. So we've got the Fed, and they're going to do their thing, and they're independent of the administration. And the other thing we have, and we've talked about this as well, is how often the 10-year treasury rate and mortgage rates mirror each other. And so if you've been paying attention over the last year, we saw 10-year treasury yields drop, and with that came a little bit of lower mortgages. Well, the last couple, 3 months, it's kind of reversed field. So as I'm speaking, the 10-year treasury is over 4.6. We had gotten it down under 4. And so rates have started to creep back up, actually. They've really kind of been stagnant and hovering in this range, between mid 6s and 7 for a while. And I'm not sure how much an administration change is really going to change that. Tariffs, all the stuff that we're all hearing about, I think a lot of this is going to come down to how fast do these things get implemented, and do they have the impact that people think they're going to have, or do they have some other kind of impact that people aren't really seeing coming? And so who really knows? And so what I would say in terms of making real estate decisions based on administration changes, I personally wouldn't make that decision. I would make decisions based on whether the numbers or the timing is right for you, given the current market, and make your own decisions about what you think is going to project out, and then kind of go from there. What we're seeing in the market actually is kind of normal, what I would call seasonal stuff. So November saw a boost year over year from the previous November in sales, and it looked really exciting. And actually December was up year over year from last December as well. But it's lower than November, and that's kind of normal because the holidays tend to bring that. A lot of people whose listings came off the market in December, we don't know if they're going to put their house back on the market now that it's January, or whether they're actually just not going to sell anymore, or what's going to happen with that. We can still see a lot of our clients kind of shaking the cobwebs off from New Year's, and they're not quite ready to start doing stuff, but they're getting ready to start doing stuff here kind of in the next couple weeks. So I would anticipate lots of people are feeling that way. And so we'll probably see in the next 2 weeks a lot. We'll have a Fed meeting as well. So a lot of new things are going to kind of come out, and that's really going to give us an indication on where things are going to happen, at least through Q1 and possibly Q2 of this year. So that's all to say. If you have any specific questions about what's going on for you, please reach out to us. If you want to kind of talk about the market, what we're seeing, what we're thinking, what we're feeling, what our other clients are doing, we'd love to chat about all of that. And if you just have any general real estate questions, we'd love to answer those as well. So look forward to seeing you guys next month. In the meantime, please log on, check out kickingitforkids.com. Hopefully you guys can support. We'd love to see you out there, and we'll see you next time.